Yes, very good afternoon. Right. So, what are the factors to be considered while using substantive analytical procedures? What are the factors to be considered while using substantive analytical procedures? But in substantive analytical, where detailed has come? No. Materiality. Factors to be considered. When there is a competition, whether I should do detailed checking or whether I should do analytical checking. So on what basis will you give preference to analytical checking? That is my question. Okay, factors to be considered while using substantive analytical procedures. Yes, so M, materiality, okay. Suitability, reliability, expectation and materiality. Factors to be considered. And one exam what they had done, this reliability, they had asked for 3-4 marks in the exams. And now the reliability of the data, the nature of the information, the source of the information, the controls over the preparation of the data and the comparability of the data. You understand? Suitability, reliability, expectation and materiality. Factors to be considered while using substantive analytical procedures. Okay. What are the circumstances which will warrant the auditor to reduce the period of retesting of controls? What are the circumstances which will warrant the auditor to reduce the period of retesting of controls? When do you do the retesting of controls? What does the standard say? At least once in every third audit. So after every one audit for 2 audits, you can go for a holiday. But when would you say holiday, nothing? We have to do retesting of controls again. Change in the personnel. When there are weak control environment, weak monitoring of controls, weak general IT controls. Last year what? So weak general IT controls, weak monitoring of controls, weak control environment, significant changes in the circumstances, changes in the personnel, or where there is significant amount of manual element in the controls. SA 330. Circumstances which will warrant the auditor to reduce the period of retesting of control. What are the roles and responsibilities of the auditor in relation to compliance with laws and regulations? What are the responsibilities of the auditor? No. Roles and responsibilities. I am not asking you the objectives of the essay. I am directly asking you the audit procedures of SA 250. What are the roles and responsibilities of the statutory auditor? What are the roles and responsibilities of the statutory auditor in relation to compliance with laws and regulations by an entity? Right, so first point, understand, make inquiries of the management regarding the laws and regulations which are applicable to the entity. है ना Shivaji Maharaj? है ना, understand, make inquiries of the management. Then second, obtain sufficient appropriate audit evidence for those laws and regulations which have a direct effect. Third, obtain, perform specified audit procedures for the other laws and regulation, inspection, inquiry. Point number 4, auditor remain alert throughout the audit to identify any instances of non-compliances with the laws and regulations. And the last one, obtain the written representations from the management. Right, what did I ask you? What are the roles and responsibilities of the statutory auditor in relation to compliance with the laws and regulations? Yes, what are the significant difficulties encountered in an audit to be communicated to TCWG? Significant difficulties encountered in performing an audit to be communicated to those charged with governance? Yes, what were the matters to be communicated to TCWG? IFRS. And F was for significant findings from the audit. And under significant findings, we had one point which was regarding the significant difficulties encountered in performing the audit. Do you remember what are the significant difficulties encountered in performing an audit to be communicated to TCWG? Yes, unavailability of expected information, unnecessarily brief time given for the completion of audit, unexpected effort required, unwillingness of management to do the assessment of going concern, qualifications in the audit report or restrictions on scope imposed by the management, or significant delays in management providing the information. What are these significant difficulties encountered in performing an audit? Right. What are the factors which will affect the agreement between the auditor and the auditor's expert? Yes, factors affecting the agreement between the auditor and the auditor's expert. You know, there is an agreement. You found out an expert. Okay, yes, this E we will appoint as an expert. So now there is an agreement which is entered between an auditor and the auditor's expert. So what are the factors which are going to affect the agreement between the auditor and the auditor's expert? No. That is while evaluating the expert. Now I am asking what are the factors affecting the agreement between the auditor and the auditor's expert. Hannah, you have never previously used the work of this expert. Then after that, what does it say? Any restrictions, you know, the responsibilities of the auditor and expert, you want to make them clear. Then also the confidentiality and sensitivity of the information which is being dealt with by the expert. Then the complexity of the matter. You understand? Then also the expectations, and the last one, the legal regulatory requirements. And a price L, if you remember, we had studied in SE 620, factors affecting the agreement between the auditor and the auditor's expert. What are the factors to be considered in the identification of an appropriate benchmark in the determination of materiality? Yes, factors to be considered in the identification of an appropriate benchmark in the determination of materiality for the financial statements as a whole. Venus, the volatility of the benchmark, the elements of the financial information, the nature of the information, the needs of the users, and the structure of the entity. And factors to be considered in the identification of an appropriate benchmark. Right, last one for now. What are the steps in the sampling plan? Steps in the sampling plan. Objective, define the audit objective to which the sample relates. That's the advantage of statistical sampling. I'm asking you the steps involved in a sampling plan. Do stratification where appropriate. So that specifies the sampling unit. But before specifying the sampling unit, first define the population and the number of population items. Then specify the sampling unit. Then decide upon the sample selection method. Then determine the sample parameters such as confidence level and accuracy. Then determine the sample size. Then choose the sample selection technique. Draw the sample, evaluate the sample. Check whether any adjustment to the original plan is needed. Evaluate the changes. And then finally, you need to formulate a conclusion. Do you understand that? Okay. Right. Then after that, yesterday we completed a lot of sections of the Companies Act. Yes, one we completed section 140, which was regarding the removal of the company auditor. Then section 142, which is regarding the auditor's remuneration to be fixed by the company in general meeting or in the manner determined therein. But first auditor whose remuneration could be decided by the board. 143, very important, no? The rights and duties of the company auditor. And duties of company auditor, two very important, 143.1 and 143.3. And now 143.1, duty as to inquiry, 6 points of inquiry. And 143.3, duty as to reporting, in which you had 10 additional points of reporting. Right? What were the 6 points of inquiry under 143.1? A, B, C, D, E, F. Loans and advances, are they properly secured? And the terms and conditions, whether they are prejudicial. Then transactions which are represented merely by book entries, again whether they are prejudicial. Where the company is not an investment or a banking company, shares, securities, debentures have been sold at a price less than the price at which they were purchased. Whether loans and advances have been shown as deposits. Whether any personal expenses have been charged to revenue account. And if shares have been allotted for cash, whether cash is actually received. And if not, then the position shown in the balance sheet, is it correct, regular and not misleading? And 143.3, we had 10 points of reporting. Information proper, branch books, AS adverse, directors maintenance, IFC others. Do you remember that? Information proper, branch books, AS adverse, directors maintenance, IFC others. And then very important one, the last one, 143.12. What was 143.12? Duty to report the fraud to CG. If an auditor in the course of performance of his duties as an auditor has reasons to believe that an offense involving fraud, which involves or is expected to involve an amount of 1 crore or above, is being or has been committed against the company by its officers or employees, it shall report the matter to the central government in the manner as may be prescribed. So if the fraud is less than 1 crore, then we will report immediately but not later than 2 days to the audit committee board of directors, the nature of fraud, the approximate amount involved and the parties involved. Right? And also the disclosure in the board report. Nature of fraud, approximate amount involved, parties involved if no remedial action is taken and remedial action taken. Right. Then after that, if the fraud is 1 crore or more, then again immediately but not later than 2 days you need to report the fraud to the audit committee board of directors, waiting for their reply or observation for 45 days. If they reply within, if they reply, then within 15 days from the date of reply, the report on fraud plus the reply, plus the comments of the auditor to be reported to the central government. And if they don't reply within 15 days from the expiry of 45 days, the report on fraud plus a note that there has been no reply of the audit committee board of directors to the central government. It has to be addressed to the Secretary, Ministry of Corporate Affairs, letterhead of the CA form, membership number to be given and registered post acknowledgement due. And it shall also apply to the cost auditor and the secretarial auditor. Right. Then after 143, we studied 128, which was regarding the books of account. Then 129, financial statements, very important over there. What did we see? Right, 129, financial statements. Can now consolidated financial statements have become mandatory under the Companies Act. So even though if consolidated financial statements are not required as per the accounting standard, still you will prepare consolidated financial statements in accordance with Schedule 3. Right, so this is up to what we had completed yesterday. Right, now coming to the next one, section 134, subsection 5, which is regarding the DRS, that is the Director's Responsibility Statement. You remember in SE 700, we had discussed the basic elements of the audit report. And a title, addressee, then opinion, basis for opinion, key audit matters, going concern. Yes, going concern, key audit matters. Management's responsibility, auditor's responsibility, other reporting responsibility is other matter, other reporting responsibilities, and then signature, place and date. Over here, you know, in this management's responsibility paragraph, I told you you had to write all the points of 134 subsection 5. Regarding what are the responsibilities of the directors, yani what are the responsibilities of the management. So in our audit report also, in the management's responsibility paragraph, we have to write down this 134 subsection 5 ka points. So one, in this director's responsibilities, first they have 3 A's and then they have a G, and then after that they are talking about 2 systems. You understand? One, what are the 3 A's that they are talking about over here? One, accounting standards. to ensure that the company's financial statements are in compliance with accounting standards, and also to invite attention to any material departure from the same. Whose responsibility? Director's responsibility. Then to select such accounting policies, and to select and apply such accounting policies, and also to make such accounting estimates that are reasonable and prudent, so that the financial statements give a true and fair view. So accounting policies and accounting records should be such so that they give a true and fair view. So this is one more place where you get to see the word true and fair. And the last one, the company, whether it has maintained adequate accounting records for ensuring the prevention, detection of fraud, and also safeguarding the assets and other irregularities in the company. So first, these are the three A's: accounting standards, accounting policies and estimates, accounting records. Then G, that the company's accounts have been prepared on a going concern basis. And then the company, there is a system for compliance with laws, and there is also a system of IFC. And a system for compliance with laws and also internal financial controls, both of which are adequate and are also operating effectively. So, if you would study DRS in the old Companies Act, that is 1956 Act, then it used to get over at 3AG. Old Companies Act 1956, when you study 2172AA, that was director's responsibility statement over there. So that time it was only 3AG. But now these two additional responsibilities have been added for the directors. One, to ensure that the company has an adequate system for ensuring compliance with laws and it is operating effectively. And the company has adequate internal financial controls, and again, which are operating effectively. Do you understand that? That is internal financial control and system for compliance with the laws. So accounting standards, accounting policies and estimates, accounting records, going concern, internal financial controls, and then it says system for compliance with laws. And for both what do they say? Adequate and operating effectively. Adequate and operating effectively. Right. This definition of IFC, I will take it when I go to the chapter of internal audit management and operational audit. So that time I'll again get you back to page number 4.19. You understand? Right, so that is the DRS. So in your exams, sometimes there could be, see, a question number 7, write short notes on contents of DRS. That's the director's responsibility statement. Okay. Then after 134, you have section 135, which is regarding the CSR, the corporate social responsibility. So actually speaking, under Companies Act, for audit class, for audit syllabus, we need to know 4 applicabilities. Okay, one applicability of section 139 subsection 2, which is regarding the rotation of the company auditor. What does it say? Which companies have to comply with this rotation ka requirement? Listed companies, always, every listed company. Other than that, it says unlisted public companies. Yes, having turnover where? Paid up share capital of more than or equal to 10 crore. And all private companies having paid up share capital of more than or equal to 20 crore. Or all companies having borrowings or deposits of more than or equal to 50 crore. And they cannot appoint the same individual as an auditor for more than 1 term of 5 consecutive years and a firm for more than 2 terms of 5 consecutive years. As on the last day. Okay. Then after applicability of 139, you also have the applicability of section 135, which is regarding the CSR, that is the corporate social responsibility. What does it say? Every company. Now what does the applicability over here say? Every company having a net worth of more than or equal to 500 crore or having a turnover of more than or equal to 1000 crore or having a net profit of more than or equal to 5 crore. You understand? And now earlier what did it say? Does anybody know? Can you notice any change in the CSR ka provisions? Companies Amendment Bill 2016, there is a change in the provision. No? Every company ही है. Have you studied CSR before? Have you seen it before? Do you notice any change? Okay, earlier it was during any financial year and now it has been made during immediately preceding financial year. You understand? Up to the old, before the Companies Amendment Bill 2016, it was during any financial year. And now it has been changed to during immediately preceding financial year. So, yes, then applicable. Then after 3 years continuously not applicable, then you need not. But now it says you have to check it for every immediately preceding financial year, then for the next year it is applicable. That way now. You understand? So what is the change? Earlier what it was? During any financial year. Now what does it say? During immediately preceding financial year. Yes, during immediately preceding financial year. And then how much do you need to contribute for CSR? At least 2% of the average net profits of the immediately preceding 3 financial years. Right, so that is one more applicability which you need to study, which is this CSR, section 135. Then one more applicability which you need to study is section 177, which is regarding the audit committee. Okay, which companies are required to constitute an audit committee? Again, listed companies, always. Other than listed companies, it says every public company having paid up share capital of more than or equal to 10 crore or having a turnover of more than or equal to 100 crore or having in the aggregate LBDD. What is LBDD? Loans, borrowings, debenture, deposits. Loans, borrowings, debentures, deposits of more than or equal to 50 crore are required to constitute an audit committee of the board. And then the last applicability which we need to study is section 138 applicability, which is regarding which are the companies who are required to appoint an internal auditor. Okay, so first I'll discuss separately section 138, then you write down. And now I'm discussing which applicability with you, which companies are now compulsorily required to appoint an internal auditor. Is everybody with me? Yes, which companies are required to appoint an internal auditor. So one, what does it say? Listed companies, always. Then after that it says unlisted public companies. And the third set it talks about is the private companies. Unlisted public companies, when are they required to appoint an internal auditor? If their deposits are more than or equal to 25 crore, or if their paid up share capital is more than or equal to 50 crore, right? Or their borrowings, 25 ka double 50, 50 ka double 100. Oh sorry, borrowings more than 100 crore, not more than or equal to 100 crore. Borrowings more than 100 crore. And the last one, turnover, 100 ka double 200, more than or equal to 200 crore. Right, now, let's say I want to appoint an internal auditor for the next year, 1st April 2018-19 financial year. So when do I need to appoint an internal auditor for 18-19? When say between 1st April 2017 to 31st March 2018, my deposits have been more than or equal to 25 crore. My paid up share capital is more than or equal to 50 crore as on the last day of the financial year, 31st March 2018. My borrowings are more than 100 crore during the financial year, yani ke 1st April to 31st of March. And turnover again it says on the last day of the financial year. You understand? So deposits and borrowings is at any point of time during the preceding financial year, whereas paid up share capital and turnover is on the last day of the financial year. Are you getting that? Yes, do you understand? And for a private company, only two conditions. What two conditions? Borrowings and turnover. Borrowings more than 100 crore and turnover more than or equal to 200 crore. So 25 ka double 50, 50 ka double 100 and 100 ka double 200. So what is happening? Jio Limited ka PBT is doubling every year. Every year double. पहले साल PBT कितना था 25, नेक्स्ट ईयर कितना 50, उसके नेक्स्ट ईयर 100, उसके नेक्स्ट ईयर 200. That is why what we remember it as, yes, doubling PBT. 25 doubling PBT. Do you understand? 25 doubling PBT. Why 25? First number so you have to remember na, otherwise if you start with 50, it will become 50, 100, 200, 400. Or you make it 10, so again it will go wrong. So first number you have to remember 25, then 50, 100, 200 and doubling PBT. D for deposits, P for paid up share capital, B for borrowings and T for turnover. Is everybody getting what I am saying? This I am again going to discuss with you when I come to the chapter on internal audit, management and operational audit. And we have a separate chapter in which this name is there, internal audit. Okay, but because I wanted to put the four applicabilities together, that is why I have put it over here, so that we have this one comprehensive chart in our books. So what does it say? Listed companies, yes, always applicable. Okay, unlisted public companies having deposits of more than or equal to 25 crore or having paid up share capital of more than or equal to 50 crore or having borrowings of more than 100 crore or having a turnover of more than or equal to 200 crore. And for a private company, only two conditions, borrowings and deposit, a turnover. Okay, so now say, let me take an example. You understand? Say A Private Limited, at the beginning of the previous year, it had taken a loan of 110 crore. However, by the end of the year, it has repaid 20 crore loan. So at the end of the year, what is their outstanding borrowing amount? 90 crore. Do they need to appoint an internal auditor? Yes, at any point of time. You understand? No? So during the year, what was the loan amount? 110 crore. And during in the year itself, they repaid 20 crore out of it. So what was the balance of the loan at the end of the year? 90 crore. But do they need to appoint an internal auditor, A Private Limited? Yes, because at any point of time. So I told you now, for deposits and borrowings, it is for 365 days. Whereas for paid up share capital and turnover, it is on paid up share capital and turnover, it is on the last day, right, of the preceding financial year. Then next year, you need to appoint an internal auditor. Is everybody getting what example I have taken? Okay, when will you need to appoint an internal auditor for 18-19? And for next year, when will you have to appoint an internal auditor? When previous year you've exceeded these limits, then next year you have to appoint an internal auditor. Is everybody got the four applicabilities? Okay, so now you need to copy down. Or have you already copied? No, no, then start writing. Yes, and you have to remember where there is turnover, where there is paid up share capital, where there is borrowing deposit together, where it is LBDD, loan borrowing deposit, and debentures and deposits together, where there is only borrowing, only turnover. So when you draw the chart 4 times on your own, only then you will get the grip. Yes, a private company is never required to constitute an audit committee. Done? Yes, written everyone? Or you have to write it only once? हो गया? Yes, and this also you'll write down? Okay, okay, no problem. And now for borrowings, it is more than 100 crore. It is not more than or equal to 100 crore. Exceeding, it says. Done? Okay. Right. So what we are discussing is section 135, which is regarding the CSR. So what does it say? These companies are required to constitute a CSR committee, out of which, yes, board consisting of 3 or more directors, out of whom at least one shall be an independent director. Right? Who is an independent director? You study it in company law, plus we'll be seeing it under clause 49. Right. What are the responsibilities of this committee? One, to make a CSR policy of the company. Then to recommend, okay, what all CSR activities can the company get into, and then to monitor the CSR policy of the company from time to time. So one, to frame a CSR policy, to identify the CSR activities. Yes, then there is a list given under the CSR rules, okay, what all activities can be conducted. Right, then after that recommend the expenditure and then monitor the policy. Yes, how much is the contribution for CSR? At least 2% of the average net profits of the immediately preceding 3 financial years. And if if a company fails to spend the amount, then the reasons for not spending the amount are to be given in the board's report. You understand? Is it a before tax expenditure or an after tax expenditure, CSR? Is it a charge against profit or is it an appropriation of profit? Is it a charge against profit or is it a below the line item or above the line item? It is an appropriation of profit. Yes, it is not a tax deductible expenditure. It is an appropriation. Right, so what does it say? If they fail to spend the amount, then the reasons are to be given in the board's report. And it says preference should be given to the local areas. Yes, for the CSR activities. Right, coming to the last section which we need to discuss in the company audit chapter, which is regarding the declaration and payment of dividend. Right, section 123. Right, what are the sources from which a company can declare dividend? Current year profits. Is this sentence complete? I am asking you, what are the sources from which a company can declare dividend? Yes? Yes, current year profits after providing depreciation. Previous year profits after providing depreciation. Current year plus previous year profits. Again, obviously after providing depreciation, and money is provided by the central government or state government in pursuance of a guarantee given. Right, so there is a golden rule, no depreciation, no dividend. Right, so if a company wants to declare dividend, pehle all depreciation khata should be clear. Then any brought forward losses of the previous year, even they should be first adjusted against the current year profits, and then after that whatever is the remaining amount, from that you can declare dividend for the current year. Yani ki say brought forward losses of the company, just to take an example, is say 10 lakh. You understand? Say current year profits of the company before depreciation is say 50 lakh. Depreciation for the current year is say 10 lakh. Then brought forward losses of previous year is 10 lakh. So after this, now from 30 lakh, you can declare dividends. You understand? These are your current year profits, against which you first charge the depreciation. Then after that, if there are any brought forward losses, and then after that, whatever is the net amount. In the old company law, in the old rules, it was given कि brought forward loss or depreciation, whichever is less. New company rules, what has been given? Brought forward loss and depreciation. So your depreciation should be clear, all your purane pap, all the brought forward losses, even that it says should be first adjusted against the current year profit, and after that, if there is a balance remaining, from that you can declare the dividend. Okay, then, now once the company wants to declare dividend, say out of 30 lakh they want to declare dividend. So what does it say? First they need to transfer certain percentage of the profit to reserves. How much percentage of profit to be transferred to reserves? Yes, how much percentage of profit to be transferred to reserves? Old company law, what it was? Depending upon the rate of dividend, there was a certain percentage of profit which was to be transferred to reserves. But now in new company law, what does it say? It transferred to reserves such amount as it may consider appropriate. as it may consider appropriate. So now it is not even compulsory that you need to transfer certain percentage of profit to reserves before declaring dividend. Transfer to reserves before declaration of dividend has now become voluntary under the Companies Act 2013. Old company law, you had the company's, declaration and payment of dividend rules. So, if your dividend was between 10 to 12.5%, then at least 2.5% of current profits had to be transferred to reserves. Now, what does it say? It may transfer to reserves such amount as it may consider appropriate. So now transfer to reserves before declaration of dividend is not mandatory. But what is mandatory? To adjust all the accumulated depreciation and the brought forward losses. Right. So can a company declare dividend out of current year profits? Yes, can, after providing depreciation, accumulated losses, all. Can a company declare dividend out of past year profits? Can a company declare dividend out of past year profits? Yes, but for that you have the rules. Company's declaration of dividend out of past profits rules. Right, so now I will give you some numericals. Yes, I will give you certain numericals and you need to apply them to those rules and tell me what is the maximum profit dividend which you can declare out of the past profits. You understand? Say example, paid up share capital of the company is 10 lakh. Right, say free reserves of the company are 50 lakh. Okay, say accumulated losses, yes, of this particular company are just say 1 lakh. And the average rate of dividend of last 3 years, of last 3 years has been 10%. So now you need to calculate 3 amounts and whichever is the least out of the 3, that I will declare as dividend out of past profits. Okay, you need to apply these 4 rules. ये देखो यहाँ पे है ना, declaration of dividend out of free reserves. Right, so you read this condition 1, 2, 3, 4. Are you all there in your books? Page number 4.21. है ना, everybody 1, 2, 3, 4. Are you seeing the points over there? Yes, you read those points. Then you read the points which I have written over here and numbers which I have given over here, and then you calculate all the 3 amounts and then we will discuss. Did you find the rules? Done, everyone? The balance and reserves after such withdrawal shall not fall below 15% of paid up share capital. Then 1/10 of paid up share capital and free reserves minus the accumulated losses, set off losses, and 10% of paid up share capital. Done? Have you got all the 3 numbers? Yes, what is the first number? 1 lakh, 10%, average rate of dividend of last 3 years. So that is 10% of 10 lakh, which is 1 lakh. Then what does it say? 10% of paid up share capital plus free reserves. You understand? So first 10 plus 50, 60. 60 into 10%, that will give you 6 lakh. And first minus 1 lakh. So that will give you 5 lakh. right? And what does it say? The balance in reserves after such withdrawal shall not fall below 15% of paid up share capital, right? So 50 minus 1.5, so that will be, yes, 50 minus 1.5, that will be 48.5 lakh. That's actually a very huge amount. You understand? So what is the least out of the three? 1 lakh. That is the maximum dividend which you can declare out of the past profits. Have you got it? Balance in reserves after such withdrawal shall not fall below 15% of paid up share capital. So how much is 15% of paid up share capital? 1,50,000, and 50 lakh minus 1,50,000. Right? So that will be 48,50,000. Yes, 10% of 60 lakh minus first set of the losses, and then 10% of 10 lakh. Has everybody got the three numbers? Yes, had you calculated them correctly? Last one, no. Okay, no problem. Done, everyone? Yes, declaration of dividend out of past profits. Right? So dividend declaration, current year profits, previous year profits. Then after that, what does it say? Once the dividend has been declared, within 5 days the money should be put in a separate bank account. And within 30 days, it should be paid to the registered shareholder. If it is not paid within 30 days, then within 7 days, it should be transferred to a special bank account. And if it is not claimed from that special bank account within 7 years, then it shall be transferred to the Investor Education and Protection Fund. So you know 5 days, 30 days, 7 days and 7 years. Right? I'm quickly going through these points because you very much cover them in law. Qualification, disqualification, appointment, removal, that I have taken more in detail as compared to dividend and books of account and financial statements. Do you get that? Right, so what does it say? Have you written, everybody, this dividend out of past profits, free reserves of the company? Right, yes, and this I already told you, that no company shall declare dividend unless carried over previous losses and depreciation not provided in the previous years are set off against the profit of the company for the current year. So सारे पुराने पाप पहले clear करना. All accumulated depreciation, all brought forward losses, all to be made clear. Then after that, if any money remains, then you will declare dividend in the current year. Right? And now come on the, yes, come to page number 4.20, the second last line over there. Come to page number 4.20, the second last line over there. Do you see that? Provided that a company may, before the declaration of any dividend in any financial year, transfer such percentage of its profits, yes, for that financial year as it may consider appropriate to the reserves of the company. Yani ke now transfer to reserves is voluntary, it is not mandatory. What does it say? May consider appropriate, as it may consider appropriate to the reserves of the company. Yes, did you get that? Okay, then interim dividend will be declared by whom? The board of directors, only if there is surplus in the profit and loss account. Okay, and now say, yes, example, you want to declare dividend in the month of October 2017 for the quarter of September 2017. You know, first quarter April, May, June, second quarter July, August, September. So now say for September quarter in the month of October, you want to declare interim dividend. Are you getting what I'm saying? You want to declare interim dividend. However, September quarter, there has been a loss. September quarter, there is a loss. But still, you think if at the end of the year, you will make profit. That is why September quarter, you want to declare interim dividend, but there is a loss. So what does it say? The rate of dividend should not exceed the average rate of dividend for last 3 years. If at the quarter there is a loss, if there is no loss, then no problem. Are you getting? If there had been profit, then they could have declared 30%, 40%, no cap. But if there is a loss at the quarter and you want to declare interim dividend, then what does it say? The interim rate of dividend should not exceed the average rate of dividend for last 3 financial years. Do you understand that? See over here the point has been given. provided that in case the company has incurred a loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of dividend. So what example I gave you, October I want to declare interim dividend, and September quarter, the quarter before that, there is a loss. Is everybody getting what I am saying? Right. Then what does it say? Such interim dividend shall not be declared at a rate higher than the average dividends declared by the company during the immediately preceding 3 financial years. So say my average rate of dividend for last 3 years had been 10%. And at the quarter there is a loss and I want to declare interim dividend. My interim dividend rate cannot exceed 10%. If at the quarter there is a loss and you want to declare interim dividend. Are you getting this point? Everybody? Right. Then 5 days it has to go into a separate bank account. It has to be paid to the registered shareholder. Next page, 30 days. Then 7 days, and if not claimed from that account within 7 years, then what does it say? Now see, do you know the change which has come over here in the Amendment Bill 2015 only? You understand? If 30 days it should be paid to registered shareholder, if the dividend. If it is not paid, then you need to create a special bank account called as the unclaimed unpaid dividend account, and you need to keep the money in that account for 7 years. And if in 7 years also the amount has not been claimed, then it says all shares. Shares also will go to Investor Education and Protection Fund, in respect of which dividend has not been paid or claimed for 7 years or more, shall be transferred by the company in the name of the Investor Education and Protection Fund. So 7 years ho gaya, he did not claim the dividend. So what you did, even the share amount you transferred to Investor Education Protection Fund. Then all of a sudden after 10 years the shareholder came. He said, no, I had gone to Himalayas for 10 years. I thought to renounce life, but then I decided, no, this is more better. So after 10 years he remembers, and he remembers all the shares and all dividend and everything, investments. Then it says any claimant of shares transferred above shall be entitled to claim the transfer of shares from the Investor Education Protection Fund. So reverse bhi aa sakta hai. Because now what is the problem? The shares are also going. If only dividend goes, theek hai na, your only dividend loss. But if the shares are also going after 7 years, then what does it say? The claimant has a right to entitle the claim of transfer of shares from Investor Education Protection Fund in accordance with such procedure and on submission of such documents. No, Investor Education Protection Fund and with the company, both he has to apply. He'll have to take a letter from the company and also apply to the Investor Education Protection Fund. You understand? And for the removal of doubts, it is hereby clarified that in case any dividend is paid or claimed during the period of 7 years, the share shall not be transferred to the Investor Education and Protection Fund. Right? So what is the new thing over there? Okay, now not only the dividend, but what happens? The shares also go to the Investor Education and Protection Fund, and there is a reversal also possible. Yes, do you get that? Okay. Now in the question bank, I think we have discussed up to question number, yes, 10 or so. Adroit we have done, Renault, 11 we have done. Right, come to question number 12. Yes, come to question number 12. Yes, page number 4.27. Are you all there? Right. What are the relevant sections of the Companies Act and steps involved in the audit of government companies? So you have to write subsequent auditor, first auditor, casual vacancy auditor, 4 marks, November 2016. In the audit of government companies. Right, so you have to write subsequent auditor, first auditor, and the casual vacancy auditor. Question number 13. Orange Limited is an unlisted public company. Its balance sheet shows paid up share capital of 5 crore and public deposit of 100 crore. Is rotation applicable? Orange Limited, is rotation applicable? Paid up share capital of unlisted है तो unlisted को भी तो अभी तो लिखा था यार. You understand ना, अभी rotation लिखा था ना हम लोगों ने. What does it say? Unlisted public companies having paid up share capital more than or equal to 10 crore. All private companies having paid up share capital of more than or equal to 20 crore. All companies, irrespective of their paid up share capital, having borrowings or deposits of more than or equal to 50 crore. So public deposits of 100 crore. So is rotation applicable? Yes. The company appoints Santra and Company, a CA firm, as the statutory auditor in its general meeting held at the end of September for 11 years. No, they cannot appoint for more than 2 terms of 5 consecutive years, no? So that is why the appointment of the auditor is invalid in terms of law. In the given case, Orange Limited is an unlisted company and they've appointed the auditor for 11 years. The provisions relating to rotation will be applicable as the deposits exceed 50 crore. Are you all with me? Yes. Therefore, Orange Limited can appoint Santra as an auditor for not more than 1 term of 5 consecutive years twice. And 2 terms of 5 consecutive years. Santra can hold office up to 2019 and thereafter till 2024. Are you getting 2 terms of 5 consecutive years? As a result, the appointment of Santra for Moth is made by Orange Limited for 11 years is void. Cooling off period. What does it say? Reappointment of as an auditor in the same company for 5 years not eligible. Yes, and what does it say? Even shall not be eligible in the same company for 5 years from the completion of the term. Therefore, he cannot be reappointed as an auditor till 2029. Are you getting that? Yes, Orange Limited. So that's again a question only of RTP May 15. Yes, Orange and Santra. Okay, question number 14. CA Rock is a partner in Ajay and Associates and Vijay and Associates simultaneously. Ajay has completed its tenure of 10 years as an auditor in Sanjay immediately preceding the current year. It may be noted that provisions of applicability of rotation are applicable to Sanjay. Now the company wants to appoint Vijay as an auditor for 5 years. Can they appoint Vijay? No, common partner, even that firm cannot be appointed for 5 years. Even they have to follow the cooling period. Would your answer be different from above if CA Rock, being in charge of Ajay and certifying authority of financial statements of Sanjay, retires from the partnership of Ajay and joins Vijay? So he says, okay, I will leave Ajay, I will only join Vijay as a partner. Still, can he do the audit of Sanjay? No, even in that case, he cannot do the audit of Sanjay. Right? Common partner, they cannot do the audit. So what does it say? In the given case, Rock was in charge of Ajay. Yes, for the statements who retires from the firm, the tenure of 10 years has expired immediately preceding the current year and the firm shall not be eligible for reappointment as an auditor for 5 years from the completion of such term. Yes, are you getting that? Yes, in both cases A and B, they cannot be appointed for 5 years. Question number 15. NIC Limited is a subsidiary of Ajanta Limited. NIC Limited is a subsidiary of Ajanta Limited, whose 20% shares have been held by central government, 25% by Uttar Pradesh government and 10% by Madhya Pradesh government. NIC Limited appointed Prem as the statutory auditor for the year. Yes, NIC Limited is a subsidiary of Ajanta Limited. Yes, can they appoint? No, it's a government company and that is why the auditor will be appointed by CNAG. The first over here, new thing for you to learn is as per section 2 subsection 45. A government company is defined as a company in which not less than 51% of the paid up share capital is held by central government, state government or governments or partly by central or state government or by one or more state governments and includes a company which is a subsidiary of a government company. And day before yesterday, what had I shown you? Deemed government companies also. Because the government company definition gets over here. Not less than 51% of the paid up share capital held by central government, state government, partly by central, partly by one or more state government and includes a company which is a subsidiary of a government company. Isko zara highlight karna. This is new thing for us to learn from the, what do you say, case studies as per 245. Important one, star. In the given case, Ajanta is a government company as its shares. So total 55% shares are held by central state government, therefore it is a government company. And NIC Limited is a subsidiary of Ajanta, hence NIC is also covered in the definition of government company. Therefore the auditor of NIC can be appointed only by CNAG. Therefore appointment of Prem is invalid and he should not give acceptance to the directors of NIC Limited. And intelligent students, you can also write that the auditor could also be guilty of professional misconduct under clause 9, part 1, first schedule. Accepts appointment as an auditor of a company without first ascertaining whether the requirements of section 139 to section 142 in respect of such appointment have been duly complied with. Right, read question number 16. Rama Private Limited is a private company. Is rotation applicable? Paid up share capital 25 crore. No, so there only it becomes applicable. Paid up share capital of more than or equal to 20 crore. Rotation of auditor, cooling off period, common partner, transitional provision, right of company to remove an auditor, rotation between partners of the audit firm. So full 139 they've asked. Plus little bit of 140 also, right of the company to remove an auditor. Right, so they've asked the entire rotation of the company auditor points. Okay, next one, question number 17. Yes, come to question number 17. State the provisions relating to filling up of casual vacancies as per 139(8) and casual vacancy due to resignation. So 33, 30, 30. 33, 30, 30. Write short note on appointment of the auditor. So we can write the full chart. Right, next one, question number 19. While auditing Y Limited. Yes, question number 19. Yes, pay attention. Right? Right, start writing the answer. At least one company audit answer you'll write in front of me, no? The rest you'll write in the exams maybe directly. But at least one you will write in front of me. So first you're going to write the provisions, then you're going to correlate it to the case, and then you have to say okay, what is right and what is wrong. Yes, start writing. As per section 139 of the Companies Act 2013, casual vacancy, all casual vacancies can be filled in by the board of directors within 30 days from the date of casual vacancy. However, if the vacancy is due to resignation, it shall also be approved by the members at the EGM within 3 months from the date of recommendation of the board in the given case. And that is why, and he shall hold office till the conclusion of the next AGM. What they have given in the question? Casual vacancy auditor, till when does he hold office? Till the conclusion of the next AGM. What is given in the question? Till the conclusion of the 6th AGM. So that is also wrong. So now the thing is, you know the legal part, but how do you write it? That is more important now. So you know, once you know the technical part of the chapter, the technical part of the chapter you should just revise, not go much behind it. Your more focus should be on the question bank, on the knack of developing the answers. Ekada legal point nahi bhi raha to you don't know also, it's once okay. But you're not able to present and write what you know. That's a big problem area. So first time when you study the subject, you are going to first study the chapter and then come to the question bank, because obviously directly going to the question bank will make no sense. But once you have finished with the first study of the subject, then you will go reverse style. First you should go to the question bank and then come to the chapter. Iska do advantage hai. Just pay attention, I'm telling you some very important tip for the exam. You know, first you should go for, first time when you study, first you do the chapter, then you come to the question bank. Because first time otherwise the question bank will not make sense. After that, whenever you study, first you should go to the question bank and then come to the chapter. One advantage of this is what? Okay, after you do the question bank and then come to the chapter, then you come to know, okay, iska aisa question aaya hai, I just saw it in the question bank. And second, what it happens, you know, when you start a chapter, you are charged up. You're starting with a chapter, so you are completely, what you say, your level of concentration level is high. And then by the time you reach the question bank, you're like, chalo, wind up. So rather, you can wind up the chapter, but question bank you have to give more importance now. So in your later revisions, what you should do? First, you should go to the question bank, read all the answers which are given over there word by word, and then after that come to the chapter. Right. Yes, start writing. Full one-page answer in all the books I want. Yes, no shortcut. Exactly how you're going to write in the exams. That is how I want the answer. As per, life में कभी भूलना मत. At least audit paper never forget. As per. Law, okay. Yes, as per section 139 of the Companies Act 2013, yes, casual vacancy for other than government company shall be filled in by the board of directors within 30 days from the date of casual vacancy, and such auditor shall hold office till the conclusion of the next AGM. Yes, however, if the casual vacancy is due to resignation, it shall also be approved by the members at the EGM within 3 months from the date of recommendation of the board. In the given case, what has happened? And then after that, the conclusion. Yes, you have to write the entire question again in the answer in passive voice. In the given case, Max has been appointed and Minnie has appointed. Whatever happened, Max resigned and Minnie was appointed by the board, and for till the conclusion of the 6th AGM. Yes, when you want to cut anything, you can just put a simple line. Why make it so prominent on the entire page? Yes, when I say something aloud, it's just so that everybody makes a note of it with no other intentions. Just ऐसे ही कि सबको भी पता होना चाहिए. Yes, you have to copy from here now, reverse करके. Written? Right? So does your answer look similar to what is given over here? In the given case, your answer. Yes, CA Max, the statutory auditor, has resigned from the office of auditor. Therefore, such casual vacancy can be filled by the board, subject to the approval by the company at a general meeting convened within 3 months of the recommendation of the board. Yes, thus the appointment of CA Mini made by the board without the approval of the company at the general meeting is invalid. Further, if the appointment is approved by the company, CA Mini cannot hold the office till the conclusion of the 6th meeting. That is, the appointment cannot be made for 5 years. The auditor can hold office only till the conclusion of the next AGM. Okay, right. Yes, everybody, have you managed to finish the answer? You understand now, reading, what do you say? I can say even 100 answers and writing one answer. And writing one answer is better than reading 100 answers. I can put it that way. What you will not learn by reading 100 answers, that realization will happen by writing one answer. That doesn't mean you should write one answer for every 100 questions. You have to do much more writing practice. But just to tell you the importance, of doing writing practice. Yes. What was this question number 15? Government company, 51% of the paid up share capital held by central state government. When was this question asked? RTP November 16 also and RTP November 14 also. Right, so if you look at the May 15 question which is there over here, and a May 16 question. So November 14 RTP, that question was there, and then after that it was repeated in November 16 RTP. So that let's forget, but RTP November 14 the question was there, and May 16 they made a question out of that. IO is registered with Registrar of Companies on 1st May. The company's 27% paid up share capital is held by central government, 28 by state government, and remaining 45 by public. The board of directors appointed RMG chartered accountants as statutory auditors for the financial year 14-15 by passing a resolution at the board meeting held on 25th of May. So this is first auditor now, 1st May and 25th May. Who will appoint? CNAG within 60 days from the date of registration of the company, and here the appointment by the board is invalid. So one, you can make use of the 245 again over here, no? And a 2 subsection 45, the definition of government company, that you could have learnt it from that RTP, the importance of that part. And remaining you can apply the appointment of the auditor. Last line देखो क्या मस्त बोला है. If the CNAG fails to make such appointment within 60 days, then the board can appoint within next 30 days. But first power is given to the CNAG. Right. Next one. Question number 21. Malta Private Limited, a newly incorporated company dated 1st July, is engaged in the manufacturing business of cotton shirts. On 30th of July, the managing director of Malta himself appointed CA Rajnath, his daughter's husband, as the first auditor of the company. Can the managing director appoint the first auditor? No, the board of directors by passing a board resolution. So state the provisions and comment on the action of the managing director. So what does it say? The appointment of CA Rajnath is not valid. And what does it say? Daughter's husband as the first auditor. So it says under the circumstances, the second issue relating to relationship of auditor with the managing director becomes redundant. So that is not to be addressed in the question. Why? Because the first thing, that the appointment itself is invalid. Next one, question number 22. Carity Limited appointed Cross as the sole statutory auditor for financial year 15-16, where till last year Word was also one of the joint auditor along with Cross. So last year the joint auditors the Cross and Word. This year they've appointed only Cross. Mention the steps that should be taken by Cross before commencing the audit work. So it is like, appointment of an auditor other than the retiring auditor. You understand? So the incoming auditor, so rather Cross is now the incoming auditor, no. So the following steps should be taken by Cross before commencing the audit. So how does it start? Removal of the auditor before the completion of his tenure, a special notice. You remember we done 4 headings under removal of the company auditor, na? So here they are writing the second heading. Now everywhere ascertain that, yani again from the procedure, verification part. that special notice was duly received by the company by members holding not less than 1% of the total voting power or holding shares of which an aggregate sum of not less than 5 lakh rupees has been paid. So 1% of the total voting power or 5 lakh value. That is the requirement for sending a special notice at least 14 days before the date of the meeting. Check whether the notice has been sent to all the members at least 7 days before the date of the AGM. Verify that the notice contains an express intention of a member proposing the resolution of or appointing a sole auditor in place of the joint auditors. Verify that the notice is also sent to the retiring auditor. Verify whether any representation is received from the retiring auditor. Verify the minutes book whether the representation received has been considered. Right? Then examine that proposed resolution, special resolution was properly passed. Then clause 8 and clause 9. NOC. Now Cross will have to take an NOC from Word, and second, ascertain compliance with section 139 and 142. You understand? Therefore, Cross is required to comply with all the above provisions provided under the Companies Act and the Chartered Accountants Act before commencing the audit. Before commencing the audit. Right. Next one. SB, a practicing CA, was appointed by Con Limited as statutory auditor. While doing the audit of Con, SB observed that loans and advances were made without proper securities. Certain trade receivables and trade payables were adjusted inter se, and personal expenses were charged to revenue account. So 143.1a, 143.1b and 143.1e. Trades receivables and trade payables were adjusted, yani ki transactions which are represented merely by book entries, whether they are prejudicial, and personal expenses, were they charged to revenue? What did I tell you yesterday? Are all personal expenses charged to revenue to be reported over here? No, you need to look into the policy of the company. You understand? You need to look into the policy, and those which are beyond the policy, those will be reported over here. Yes, personal expenses, if they are covered by company's contractual obligation or as per the accepted business practice, it is perfectly normal and legitimate, and does not call for any special comment by the auditor. However, personal expenses not covered by contractual obligation or accepted business practice, which will be the duty of the auditor to report thereon. So you need to look into the company's contractual obligations. Right, next one, question number 24. Okay, this is one question which I am waiting for the institute to put in your exams. Okay, R raised to 10. XYZ and Company, auditors of Goodwill Education Foundation, a recognized non-profit organization, feels that standards on auditing need not be applied as Goodwill Education Foundation is a non-profit making concern. So when you are doing the audit of a non-profit, section 8 to company hota hai. So here it is not a company, no, they are saying it's a foundation. So while doing the audit of a foundation, it says you need not follow the standards on auditing. Now see, 143.9 and 143.10 is regarding company or duty of the auditor to comply with the auditing standards. But Goodwill Education Foundation is not a company. Assuming it's not a section 8 company, say it's a trust. Then it says, go to the preface. What does it say in that case? You need to go to the preface of these standards. And in the preface, the definition of audit, which in your IPCC audit you would have done it on day 1. Audit is an independent examination of financial information of any entity, whether profit oriented or not. That is why it says you need to follow the standards. Irrespective of its size or legal form. Do you remember something like that? And when such an examination is conducted with a view to expressing an opinion thereon. And so whether profit oriented or not, audit is an independent examination. So what reference have they made to? Section 143, subsection 9 and 10. Right, what does it say? You need to follow the standards. Then after that, the preface issued by the ICAI for these standards. And it also, while discharging their attached function, it is the duty of the CA to ensure that SAs are followed in the audit of financial information covered by their audit report. In the given case, even though if the client is a non-profit oriented entity, the SA shall apply and the auditor should be guilty of professional misconduct for failing to discharge his duties in case of non-compliance with SAs. So actually I can also go to 912. 912 नंबर तो सुना होगा. Fails to invite attention to any material departure from the generally accepted audit procedures applicable to the circumstances. You can write down over there ethics 912. And you can also write down over there ethics 912. Ethics 912. Yes, next one, question number 25. Right, what does it say? Did not report on the matters under 143(1) because of the reason that he was satisfied. इतना देख के मुझे बता दो answer. He did not report as he was satisfied. Yes, because I told you, it's like the fundamental accounting assumption. If not followed, then a disclosure is required. So here the auditor is absolutely right. Yes, by not reporting on those matters of 143(1). Right, so again RTP November 14. So special emphasis on questions which are only the RTP questions. Right, so this one again, so at IPCC level they directly asked you 143(1) ka 6 points of inquiry. Are you getting? IPCC I told you, November 16 paper, question number 7, write short notes on. They directly ask them the points of inquiry. For CA final they may develop such type of a question. Okay, the auditor has not done the reporting as he was satisfied with the reasons for the inquiry done. Right, then after that, next one, question number 26. State the matters to be specified in the audit report in terms of provisions of 143(3). 10 points, information proper, branch, books, AS, adverse, directors, maintenance, IFC, others. Next one, 27, director of TUI Limited draws an advance of $200 per day in connection with the foreign trip undertaken on behalf of the company. On his return, he files a declaration that the entire advance was expended without any supporting or evidence. TUI Limited books the entire expense on the basis of such declaration. As an auditor, how would you deal with this? So 143(1)(e). Right, where personal expenses have been charged to revenue account. Right, next come to question number 28. Yes, 4 marks, November 2016. An auditor observed a fraud committed by an employee of the company. State the manner and timing of reporting of the fraud by the auditor. Now actually they should have given some amount, 1 crore, 10 crore or so. Now for 4 marks, how much to write? Okay, right, next one, 29. Obligations of the statutory auditor to report fraud to CG. Yes, during the audit carried out under the Companies Act. So again 4 marks, November 2015. So looks like a November question. Okay, right, next one, question number 30. Amudha Limited is a Mumbai-based company. The total turnover of the company is 10 crore. The company has a branch office at an area which was recently affected by flood. The transportation services are not available due to destruction caused by flood. The branch office recorded a turnover of 1,50,000. No audit of the branch has been carried out. The statutory auditor has also made no reference to the above branch in his report. Comment. But the audit is only not done now of the branch. See, if the audit has been done by the branch auditor, then you will say, okay, we've considered their report while preparing our report. The branch has only not been audited. Likha hai na, no audit of branch has been carried out. Is it okay? Turnover of company 10 crore. Branch ka turnover 1,50,000. So matlab the branch should have been audited either by the company auditor himself or a person who is qualified to be appointed as an auditor. You know, old company law, you had those branch audit exemption rules 1961. You don't know, no? Very good. That's why you're not getting confused. In that time, there was an exemption for the doing of the audit of the branch. If the turnover of the branch is less than 2 lakh or less than 1% of the average annual turnover, 2% of the average annual turnover. But now, no branches are exempted from the conduct of a branch audit. no branches are exempted from the conduct of a branch audit. Each and every branch of the company is required to be audited. If the branch is in India, company auditor or person qualified to be appointed as an auditor. Branch outside India, company auditor, person qualified to be appointed as an auditor, or the person qualified to be appointed as an auditor as per the laws of that foreign country. Remember yesterday we said German CA, American CPA. Right, so every branch of the company is required to be audited. Therefore, the company has to get its branch audited. Are you reading? Therefore, the company has to get its branch audited. In case no branch audit has been carried out, company auditor is required to mention the fact in his audit report and deal appropriately, and thus no reference of above branch in statutory auditor's report is not correct. Right, so he needs to mention that the branch has not been audited. Right, so RTP November 16, so it is on the radar. Yes, R raised to 10. And that RTP May 16 also, the question after that also. So 2 times they took special effort to put a question in the RTP. Right, so both questions are question number 30, question number 31, both are R raised to 10. Read question number 31. Lux Limited has a branch office located outside India. Company is in the process of appointment of a non-CA as an auditor, but otherwise qualified person from country where the branch office is situated. Otherwise qualified person from the country, branch outside India. Qualified? क्या लिखा है? Company is in the process of appointment of a non-CA as an auditor, but otherwise qualified person from country where the branch office is situated. And in case of branch outside India, a person as per the laws of that foreign country. Statutory auditor is of the opinion that non-CA cannot be appointed as branch auditor. Statutory auditor is not an audit class. You understand? No. He is of the opinion that non-CA cannot be appointed. So you need to tell him 143 subsection 8. If the branch is outside India, then what does it say? Company auditor or by an accountant or any person qualified as per the laws of that country. Thus a non-CA can be appointed as an auditor of a branch outside India provided he is qualified for appointment as an auditor in that country. Is everybody getting that? Yes. Next one. Read question number 32. No talking in the class. Read question number 32. An auditor became aware of a matter regarding a company only after he had issued his audit opinion. Had he become aware of the same prior to issuing the report, he would have issued a different opinion. So one, you can apply SA 560, facts that become known to the auditor after the date of the auditor's report, and then you need to check before the financial statements are issued or after the financial statements are issued. But here why I have given this answer over here? Because it says that you came to know a fact after the issue of the report. But you also have a right to receive notice and attend general meeting. So what you can do, you can directly go to the general meeting of the company and tell the shareholders about the matter. If the management is not ready to take the steps, to revise their financial statements. If revision of financial statements is done by management, then no problem. But if no revision is being done, then it says the auditor can directly go to the general meeting of the company. So that's a question on section 146 now, auditor to receive notice and attend general meeting. I told you yesterday, unless exempted by the company, attend either by himself or through his AR. An authorized representative who is also qualified to be appointed as an auditor. Right, so what does it say? Likewise, it may be advisable for the auditor to attend the meeting with a view to bringing to the notice of the shareholders any matter which came to his knowledge subsequent to his signing of the report, and if it had been known to him at the time of signing his report, he would have drawn up the report differently, or where the accounts have been altered after the report was attached to the accounts. Next one, question number 33. Well, adopting the accounts for the year, the Board of Directors of Prima Limited decided to consider interim dividend declared at 12% as final dividend and did not consider transfer of profit to reserves. As a statutory auditor, how would you deal with this? So as per the Companies Act, transfer to reserves is not mandatory, and that is why it is appropriate. So 4 marks, November 2016. Yes, so one, you need to write the source, then interim dividend can be declared by the board, then it could be final, and then transfer to reserves is not mandatory. Right, next one, read question, no talking in the class. Question number 34. The board of directors of ACP Limited has recommended 15% dividend on if paid up share capital of 450 crore. The board decided to rescind their decision, matlab take back their decision to recommend the dividend. So first they recommended dividend, then they say, oh, sorry, now we don't recommend. Can they rescind their decision? The board of directors? Yes. The members, once they have declared the dividend, they cannot rescind the decision. But the board of directors, once they've recommended the dividend, recommended the payment of dividend, they can rescind their decision. After the declaration, you cannot rescind the decision. So dividend is firstly recommended by the board. Thereafter, the members in the general meeting may declare the dividend by passing an ordinary resolution. The members may reduce the rate or amount recommended by the board, but they cannot increase it. Section 123 of the Act provides that dividend shall be declared or paid by a company out of the profits for the current year after providing depreciation. Further, as per 127, dividend once declared becomes the liability of the company and must be paid within 30 days from the date of declaration. Any failure to do so attracts a penalty for the various persons associated with the management. Here in the instant case, thus the dividend which is only recommended and not declared does not attract any penal provisions. Therefore, the board of directors may rescind their decision to recommend the dividend. Next one, question number 35. This I think I had shown it to you before also. The audit report of a company states that proper books of account as required by law have been maintained by the company. What is the role of the statutory auditor when a company be said to have not maintained proper books of account? So I told you, when are books of account considered to be proper? True and fair view, accrual basis, and double entry system. And where will you do the reporting if proper books are not maintained? 143(3)(b). Yes, 143(3)(b). So again you see what I am saying turns into reality sometimes. RTP May 13 and then 4 marks May 2015. 2 years वगैरह time they keep it, है ना, they keep it on hold and after that they transfer it. You understand, no? जैसे वो stock market में होता है ना, you put an order and when it reaches the trigger price, then it is released into the regular market. The trigger price, okay, so trigger time over here is 2 years time. Okay, right. Yes, next one, question number 36. Reading such questions in the exam will take you all the time on earth. And then understanding, so it's better that you've read them before only. Read question number 36. Fine Limited is engaged in the production of jute. Which was financed from a good bank. I mean, naam good hai ki it's a bank which is good. So this is more of your accounts teacher ka question. So should this be shown under long-term borrowings or under other current liabilities? Whatever is the installment of the long-term loan, I think that also now you show it under current liability, na? Whatever is the EMI, what you have to pay on the long-term loan, even that you show it under current liability. One thing, see, I can give you some gyan. You understand, whenever this schedule 3 question is asked in the exams, no, this is the standard sentence with which you will start your answer. As per the general instructions for the preparation of balance sheet, profit and loss, whatever is the question about, provided under Schedule 3 to the Companies Act 2013. Current maturities on long-term debt is required to be disclosed under the head other current liabilities in the notes to account. It may be noted that current maturities of long-term debt refers to that portion of the liabilities of the company that are becoming due in next 12 months. Since these obligations are repayable in next 12 months, they are shifted from long-term liabilities section of the balance sheet to current liabilities section. And therefore, what does it say? They should be shifted to other current liabilities in the notes to account, right? So again, only fresh RTP question. Yes, only RTP November 16. Right, yes, next one, question number 37. MG and company seeks your advice while preparing the financial statements. The general instructions to be followed while preparing balance sheet under Companies Act in respect of current assets and current liabilities. So you have to write down the definition of current asset and current liability. And a normal trading cycle within 12 months, cash and cash equivalents. You understand? So expected to be realized in the normal operating cycle, primarily for the purpose of being traded, expected to be realized within 12 months, and it is a cash or a cash equivalent. Same thing for current liabilities also. Normal operating cycle, purpose for being traded, settled within 12 months. Then an unconditional right, and does not have an unconditional right to defer the settlement of the liability for at least 12 months, yes, after the reporting date. Right, so current assets and current liabilities. So sometimes, you know, we are also seeing these Schedule 3 questions. Right, and then the last one, last one. Question number 38. Draft an audit report under the following circumstances. Under the Payment of Bonus Act, a report on the computation of bonus payable. An auditor's report in accordance with Regulation 54 of the SEBI Mutual Fund Regulation 1993. For such type of questions, you need to pray to God. Okay, now I have just put it over here. If it is repeated, it will help you. May 17, May 15, there have already been martyrs, you know. And there have already people who have sacrificed their 4 marks for this particular question. But now going forward, if the question comes, then at least, you know, you earn something out of their sacrifice. But now, obviously, chhodege to nahi. When we study, we leave things in option. But when it comes to writing in the exam hall, we don't leave anything in option. So at least what you will write? A report on the computation of bonus payable. So what we'll write? According to the information and explanation and to the best of our knowledge and belief. Right? The computation of the bonus payable has been done by the company in accordance with the provisions of the Payment of Bonus Act 1965. Active voice convert to passive voice. And second one, audit report in accordance with SEBI Mutual Fund. That the financial statements, balance sheet, profit and loss account give a true and fair view. That proper books of account as required by law have been kept. We have obtained the information and explanations from the management which to the best of our knowledge and belief were necessary. Right, so what does it say? First, Payment of Bonus Act, the above computation is in accordance with the provisions of Payment of Bonus Act. And for mutual fund, what does it say? We have obtained information explanation. Balance sheet, profit and loss account, revenue account are in agreement with the books of account. And they give a true and fair view. The balance sheet gives a true and fair view and the revenue accounts give a true and fair view. You understand? So information and balance sheet, profit and loss in agreement with the books of account. So A, B, C, D. Na? So they are talking about A and C. And they are talking about A and D. You understand? What is 143.3 I am talking about? Information, proper branch books. So information, explanation. Then after that books, where the balance sheet, profit and loss and cash flow statement, are they in agreement with the books of account? And last thing, whether they give a true and fair view. Right, so that completes one of the huge chapter again, yes, which is regarding company audit. So now we don't have many huge chapters except for bank audit and tax audit or so. Right, so after the break, we shall start with the next chapter on the liabilities of the auditor.